Oh, hey, happy Monday. Hope you're all doing well. Let's dive into an Outlook, see what's going on for pound US dollar. And we'll start as we normally do on the weekly chart. Let's make this big. As we can see, last week we closed super bearish and we're pretty much continuing that tone. And, we are inside of this weekly demand zone. So this could be where we start to see a reversal back to the upside. If we look to the left, what were we reacting to? It was basically this area right here. But if we look to the left and kind of just start to look at things, we have demand right, if I can get that point to agree with me, right here. So we have initial reaction, extremely reaction lag, and then the failure that creates that large impulse. We actually have this larger zone that we're basically trading just below. This is the flip zone, and it's also basically part of this chain here. So this is likely where price is going to be reaching to at some stage. So looking for further upside, kind of continuation of this demand zone does make sense, but forecasting this week's candle based on the close of the previous candle, a lot of bearish momentum in the markets. So we could see a continuation of that. As we can see, we have already broken the previous week's low. We're starting to see a little bit of sensitivity to that. So we'll see if that becomes the catalyst to start pushing price to the upside or not. We'll go to the daily charts. As we can see, we have the previous week's high and the previous week's low range kind of mapped out here. We see that sensitivity here on Monday. Let's pull out news. There's no news today, so I believe there's only news starting on Wednesday, if I remember correctly. Yeah, FOMC meeting minutes. What we're going to do is we're going to open up Edgeful as we always do. Kind of just look at some data here. So if we're anticipating a bearish candle, we would anticipate 40% probability that our high of the week is going to be placed on Monday. So potentially this high, or we could retrace up. But then obviously if we switch that to a bullish weekly candle, if we're anticipating that this demand zone is actually going to do its job in pushing price higher, the low of the week could be on Monday. So if we start to trickle up starting later today and into tomorrow, then we could be suggesting that it's going to be a bullish candle. So we'll keep that in mind. We're going to look at a slightly different variation of a report. So I have the previous week's range report here. We're going to use it by open, last 6 months. And basically what this is going to look at is the range from the previous week's high to the previous week's low. And the only other thing that I'll need to kind of just toss on, and I'll use this tool here, is the midpoints, which I clicked it and it went away. That's silly. Yeah, do that. Doesn't have to be super scientific. So basically what this report's going to be looking at is we are opening below the middle point of the previous week. As we can see, we opened down here. And what this means is that we have a 66.67% probability that we're going to touch the previous week's low. Well, we already did that, so, job well done there. So that's pretty much it. I didn't really think too much through when I opened up that report to talk about it because we had already done it, but that's okay. I don't typically look at the charts until we start the Outlook. So there you go. There's 100% probability that we took that low. Anyway, previous day's range, we can look at this. I've switched this one to daily. Before I was looking at New York, realizing that the data that the previous day's report was fixating fully on the New York session. So if I did market sessions and we did something like this, the New York session that it would be basing the data on would be this, and basically that must be just at a session. Yeah, because it goes till 4 o'clock. So it'd be more that as opposed to, we would be using this high and this low that was set all in London. Wouldn't factor that in at all. So if we're looking at this for the whole daily report, this means it's going to actually use it through that range. We'll just delete that, and delete that. And basically, what it's going to mean is that if we break the previous low, we have a 57% probability that we're going to close bearish. And then again, we can filter that down to New York as well, and it just changes it to about 50%. So it's about the same, but just one thing I wanted to point out, that if we're using previous day's range, we need to be very mindful of the sessions, basically to figure out what the data is pulling, because obviously it's going to be a big fundamental difference if you're kind of just looking at the high of the low of this particular range, New York session, versus London or yeah, the whole day. Anyway, so daily chart, not much else is really standing out to me. We do have this demand zone. This is the weekly demand zone as well. So if we start to see, order flow shifts from here, ideally on a 4 hour to see that 4 hour front leg forming, that would be good. But, until then, we see last week we failed to break below this low. Nice big wick. This could have been demand technically, not really. But, we're basically just breaking, retracing. So we're getting that corrective price behavior, which is usually synonymous with a potential reversal. It doesn't mean it has to happen at all. We could come up here and still continue doing this break and retrace price action indefinitely. But we are interacting with this kind of area here. So we do have a potential point of reversal. But for now, the best thing to do with the market is just kind of trade it accordingly. We're in this bearish front leg. Interestingly enough, though, we didn't really have 4 hour supply really take control here. We just had bearish order flow in the 15-minute, and we were in a 4 hour front leg, but we don't really see any key areas of supply. Like this didn't come up to here, interact with this. This didn't come back into this and then take us to where we are. We just kind of kept trickling to the downside. So it is interesting to see that there's been a lot of momentum to the downside where we haven't really necessarily seen that sort of order flow happening. So we'll see. I'm not necessarily banking on the longs as much as I used to. I would be very bullheaded when it came to, we're in demand, we're going to look for, order flow shifts and all that sort of stuff. I'm just going to let the market kind of showcase what it wants, because obviously, as we've seen in the last few weeks, when the market starts moving, and it's typically no real problem to be looking for trades after that point. So let's go to the M15. We will look at, again, one of my favorite edge flow reports. We'll put on the market sessions as well. This is the Asian range breakouts. And you'll notice that we don't have a time window toggle or a session toggle. That's why, because this actually is just focusing on Asian session data specifically. So if you're using Edgeful or you're considering using Edgeful, just be mindful of the sessions that you have, because it's going to factor in that data. But as I said in the previous one, if we go back, you can go back to a full daily picture just to get everything if that's what you want to look at. I only trade New York, so it is nice to just get New York specific data. So everything I have been talking to in the past has been specific to New York. But as we can see, 65% probability over the last 6 months that if we break and close below the Asian session range low, that we'll have a bearish day or a continuation kind of bearish. We've already seen that. So far that's remaining true. We'll now look into the market session correlation. And if we look at Tokyo and London first, if we have a red Tokyo, or a bearish Tokyo, or down Tokyo. So we opened here and we ended up closing right here. So we do have, I wonder if that's new. I think it might be on the indicator, but you can see these little lines here. That'll show if you're bearish or bullish. So this was a bearish session, so it just makes it even easier to identify these things. So with that said, we had a bearish Tokyo session, which means we have a 64% probability that London is also going to close bearish, which so far is holding true. And then if that's the case, we have a 69% chance that New York will also close bearish. So it's always nice to see these. And then if we just look at, this kind of stuff, what's the probability that, we can see momentum through this breaking above the Asia highs or even London highs? It's about 30%. So there is a percentage that we could break the Tokyo high. It's probably fairly unlikely, especially since there's no news. And then if we go to London and New York, we have almost 40% chance of no breaks and 61% of single breaks. So yeah, it's kind of looking bearish, but of course, we have demand here. We just took out this low and we're starting to react from it. So that could mean that we could be moving to the upside. Could be fairly slow. We have no news. So we'll just have to wait and see. As far as order flow is concerned, we have kind of just demand holding here, unable to hold here. We start to see it fail. So if we delete all that, you can see that we just kind of come into this range, break down, come back into supply, come down. So the area that I'd be most interested in right now is here, potentially looking for some sells to continue down. Obviously, this becomes higher risk, we'll call it, just because of the fact that we are interacting with Demand, we've seen sensitivity at the prior week's low, but if the market is truly going to continue with supply and control, then it shouldn't be too much of an issue to see it continue like that. So yeah, that's kind of what I'm looking at. Obviously, the 4-hour kind of correlates with that. I say kind of because it doesn't quite. Let's just get rid of this for a second off of here. So we do something like this. A little bit of a 4-hour supply chain. Make sure that's on the 15-minute, or that's going to look kind of messy. You could argue that these buy to sell wicks are also part of this chain, because I think you could probably also argue if you do something like this, you have an initial reaction, extreme reaction leg, and failure. I don't think it taps the wick. Oh, it does. So it did. You could even make it a little bit cleaner here. Okay, so we have demand chain. We get to that kind of final piece of demand, even though we took out all of this internal range liquidity. So, in hindsight, waiting for this to hold probably wasn't the smartest idea, or trying to take trades on this holding, probably not a great idea. And as we can see, initial reaction, extreme reaction, like failure. We come back into that. We push down. We're breaking and retracing. If we look to the left, we have this, which is what we're interacting with right now. Is that going to provide us with any, tangible bounce? Who knows? I guess we'll find that out as we monitor order flow and see what's going on there. But yeah, that's kind of how I'm looking at things here on pound US dollar as the market opens this week, and as we head into New York session, obviously leaning on some of this edge flow data just to give me a tangible edge in terms of direction. Just being able to find out, well, if these sessions close bearish, for example, what's the percent probability we'll see a continuation of that bearish momentum? All that sort of things. We looked at the weekly range, the fact that we opened below the midpoint of the weekly range. There was a high probability we were going to take the low, which we did. Obviously, we could see that before I even started the Outlook, so it's not really too fancy by any means. But yeah, then on the 4-hour, we're still seeing that chain. This is probably, as I mentioned earlier, there wasn't really supply holding. We're finally kind of starting to see that at the very end of the leg. So that's always good, I suppose. Yeah, but yeah, that's pretty much it for me. It's hard because I like to take longs. I'm definitely more on the long bias, which is interesting because I used to always favor the shorts. I found it easier to short, but now I'm finding it easier to long. Maybe that's because I'm trading indices now, and the longs just work. But even before I started trading indices, I was wanting to long pound US dollar. But I mean, when you look at the trend in the last, 5 months or so, 6 months, it has been inherently bullish. So, but yeah, that's it for me. I hope you all have an incredible day on and off the charts, and we'll see you inside the Discord. Cheers.